Welcome to Friday Takeaway. We take a look at the ongoing shake-up for government service providers Prestariang and Skicom. But we need to talk about markets ended the week muted but steady thanks to a series of developments, starting with UK PM Theresa May holding on to power yet again, just after she won a pivotal confidence vote by 200 votes to 117 votes against her. This means her leadership can't be challenged for another year. But she will still have a hard to near impossible time pushing through her Brexit deal, which was actually supposed to be put to a vote on Tuesday. But her own members seem to hate certain aspects of it, and the EU, as expected, are actually not keen on renegotiating. The markets also welcome more calm in the US-China trade snafu, well, amid news that Trump's inner circle keeps getting arrested for apparently paying off porn stars. The Wall Street Journal reports that China may actually replace its Made in China 2025 policy with one that allows for more foreign participation, softening PRC's goal of manufacturing dominance. But then on Friday morning, China reported some really ugly industrial output and its retail sales growth missed expectations, which knocked markets back a step. All in all, the market ended the week more than a little sideways as some big earnings came out, but the global sentiment was just too big a factor. At home, the week started off with news about Pilgrims Fund Tabung Haji and the news that apparently has been paying dividends illegally since 2014 because it actually had more debts than assets. Now, an MOF SPV will be taking over almost 20 billion in Tabung Haji assets as it tries to set the fund right. Now, interestingly, Tabung Haji's former chairman, Datuk Sri Abdul Aziz, refutes claims of mismanagement, saying that the National Audit Department and Ernst & Young had given them a clean bill of health, only for EY to come out and say, no, we didn't, and no, we're not your auditors. Top Glove took a hit after an expose came out that the gloves that were being supplied to UK's National Health Service were essentially produced by mistreated migrant workers who worked in hellish conditions. Top Glove, however, said there is absolutely no forced overtime on its workers and that it has put in place measures to ensure that it never happens. This week, we focus on e-government service providers and how the Pakatan Harapan government keeps surprising them. First up is Prestariang, which got a nasty surprise when the government announced it's scrapping the Skin project, which was actually supposed to drive its earnings. And in the other corner is Scicom, which hit limit down because nobody knows at this point where the axe will fall. But does it have more to offer than just government contracts? Let's take a closer look. Prestariang is an ICT service provider with focus on training, certification, and software license distribution and management. And for a while, one of its biggest projects was the Sistem Kawalan Immigration Nasional or SKIN, but that is apparently no more. So yes, earlier this week, the Home Minister announced that the government has agreed to scrap the 3.5 billion ringgit SKIN project where Prestariang holds a 70% stake. It caught many in the industry off guard, including Prestariang itself, who apparently had no clue, because it pointed out that it wasn't in any default of any conditions of the agreement and there had been no official notice from the Home Minister. The official letter actually came a day later, and the actual termination date now is set at January 19, 2019. Understandably, there was panic with Prestariang's share price dropping from around 40 cents at the beginning of the month to around the high 20s where it is currently, but it is a massive plunge from 3 months ago where it was almost 1 ringgit. CGS-CIMB called it a negative surprise and an unexpected outcome because Skin was supposed to be a major earnings driver for the group. So, what is left? Well, most immediate is the fact that the government will compensate Prestariang since, the company didn't technically do anything wrong. But the size of the compensation is still very much up in the air. Prestariang did say, though, that it has other existing contracts under its tech and talent divisions, which it says will be sustainable and viable, its own words. The company still sells Microsoft software to the government as well, and don't forget, back in September, it had secured the Master Licensing Agreement 3, which ends on January 21st, 2021, and is worth around 222 million ringgit. It is a complete sell across the board going by Bloomberg data, and the prices being put forward range from 26 cents to 20 cents. CGS-CIMB also cut its earnings forecast for the company for the financial years FY18 to 20 by up to 88% and lowered its target price to 26 cents. Skicom's origins were actually as a call center, and now it's one of the largest business process outsourcing companies in Malaysia and Sri Lanka. But aside from that, it is also involved in e-commerce, education solutions, and most notably, e-government solutions. It seemed to definitely be a case of contingency shakes after the whole thing with Prestariang, and Skicom saw its share price drop despite there being no real development at the company. Just to note, MyAG saw the same thing happen to its share price as well. So it seems that now everyone is fair game. Skicom's main local government contract actually is for providing the back-end solution to the one-stop visa center for foreign students. It's known as Education Malaysia Global Services, or EMGS. But you know what didn't help matters? Earnings in general have also been weaker. It actually really got so bad that Bursa actually had to suspend the proprietary day trading and intraday short selling after the stock hit limit down. It is almost half of what it was just 3 months ago, where it was around RM1.80. So earlier this year, Skicom had bagged a Cambodia tourism project, which a lot of analysts had called a very positive development. It offers exposure to the country's fast-growing market and opens the door to other possibilities. However, that does come with more than a bit of a caveat, given that it has been very slow, very slow to get off the ground, and that must be taken into account. But according to its ZJ research report, it does expect both the EMGS and BPO business to actually turn around the second half of FY 2019, and it is developing new products. So far, analysts are cautious on Skicom, and a couple have actually tweaked their recommendations. Affin Hwang Investment has a whole call with a target price of RM1.80. MIDF's neutral recommendation comes with a RM1.77 target price, which at current levels, if you look at it, means some upside.